Hello, everyone. Good morning, good afternoon, good evening. Welcome to Toronto Center's webinar on pandemics and financial inclusion. I am Babak Abbaszadeh, President and CEO of Toronto Center for Global Leadership in Financial Supervision. Since our establishment in 1998, we have trained more than 13,000 mid and senior level supervisors and regulators from 190 jurisdictions. More than 1.7 billion people worldwide remain unbanked, and the majority are women. Therefore, financial inclusion is very important for the achievement of the SDGs. Plus, crises such as this pandemic, disproportionately affect the poor. In today's episode, we sit down with two prominent experts to cover financial sector regulation supervision, as well as the financial inclusion dimensions of the current challenge. We circulated their bios to you in advance. The Honorable John Rwangombwa is the Governor of the National Bank of Rwanda. He's also the former Minister of Finance and Economy of Rwanda. In 2015, he was voted Governor of the Year for the Sub-Saharan Africa region and represents his country at the World Economic Forum and many other distinguished entities. Conor Donaldson is the head of implementation of the International Association of Insurance Supervisors. He's well connected to various high-level international fora on cooperation on standard setting, and is a member of Toronto Center's Insurance and Pensions Advisory Board. Welcome to both of you, gentlemen. Thank you for joining us today.
Thank you.
Welcome.
Thank you very much, Babak.
Thanks. Finally, I would like to thank our funders, Global Affairs Canada, Swedish CEDA, the IMF, USAID, Jersey Overseas Aid, and Comic Relief, without whom we could not achieve our global mission. Also, a big nod to Demet Canakche and Diana Bird of our office, who work tirelessly to make these webinars possible. Thank you. Before we start, I know that many of our viewers have questions for these two experts, and we have allotted time to deliver your answers. Please type your questions in the Q&A tab on your Zoom, which you will find below the video screen, and we will answer as many as time allows. So please do not use the chat function, use the Q&A. It's already there. Governor, the first question goes to you. Crisis matters. Over the past decades, World Bank research has highlighted that financial crisis can throw millions back into poverty. We all still have fresh memories of the 2008 financial crisis, as well as other global and regional crises. But this one feels different. In your view, what's different this time?
Yeah, thanks, Babak, and thanks to the Toronto Centre for the invitation to this webinar. Yeah. We've gone through different crises across the globe, but I would say this particular crisis is different from the 2008-9 crisis, maybe from three angles. One is the 2008 crisis was really a financial crisis and focused on issues to deal with the economy. And so across the globe, efforts were focused on stimulating the economy. And so at least resources were pushed in one direction. While this particular crisis is started with the health crisis, so sort of the opposite. Now, people are locking down economies to try and deal with the health issues brought about by this pandemic. And that, in effect, has impacted negatively on different economies. So one is in what kind of crisis we are dealing with. This is really different. We have a health crisis that has created an economic crisis, and that's a bit complex to deal with. Number two, in terms of the magnitude, in 2008-2009, yes, the global economy crashed, but we expect the crash this time to be more significant. When you look at the numbers, I think that time, 2009, we had the global economy growing by negative 0.1%. And as you heard from the IMF, this year, the global economy is projected to shrink, let me not use grow, to shrink by negative 3%. So the magnitude or the negative impact on the global economy is really big. That is in terms of the numbers, but this one is also now affecting almost every country across the globe. When 2008-9, some of our countries that were underdeveloped and not really linked to the global financial system were a bit shielded from the crisis. So we, for example, talking about Rwanda, we really didn't feel much about the 2008-2009 crisis. But now we are being hit, and we expected, the developing countries are expected to be hit harder than even the developed countries. So take an example in Rwanda, that time our economy grew by 6.2% in 2009. This time, the preliminary numbers we have, we are revising down the original projections we had of 8.1% by the beginning of this year for 2020, and revising that down to 2%, assuming all things go well. So it's different in terms of the magnitude, in terms of the geographical impact. And then the third and even more difficult one is that time in 2008-9, authorities had policy options. We had tools to use to deal with the financial crisis. Either monetary policy, we had room to adjust monetary policy. Then, from the fiscal policy point of view, countries went to borrow to invest in infrastructure projects and different other sectors to stimulate the economy. Today, the countries are heavily indebted and linked to the 2008 crisis. So the room to borrow and stimulate the economy is now very limited. The banks, the central banks, the monetary policy is completely limited. All the tools were used to deal with the financial crisis. Most of the banks are 0% policy rates, so you can't go any further. We've gone into non-traditional policy tools used by central banks. It really hit us when we are in a difficult situation and with the limited policy actions. So it might take time to really deal with the economic impact that comes with this crisis. Thank you.
Thank you. Well, thank you very much, Governor. You connected the dots very well. It's interesting, and it's also kind of anxiety-inducing to hear that the bullets have already been fired, and maybe we need to go grab a baseball bat or some other kind of a weapon to deal with this. And another observation is that in 2008, 2009, banks and insurance companies, for some, were the culprits. Now everybody seems to be a collateral damage, and we're all in it together. So you connected them very well, as I mentioned. Just a quick mention that we have more than 200 participants, I think reaching close to 250, from countries ranging from Albania to Zimbabwe. So we have all the letters of alphabet covered today, and from all the major continents: Africa, Asia, Latin America, Europe, so, and North America, of course, and friends from Malaysia and Indonesia. So, you know, no time zone has stopped people from listening to you. So no pressure for you, Conor, but moving on to you. Emerging markets and developing economies face higher economic risks and hardships for their vulnerable populations due to a lack of resources during the COVID-19 crisis and economic disruptions. From your vantage point, what are the implications for the insurance sector and supervisors, please?
Thank you very much, Babak. And there's a lot to unpack in that question. So first and foremost, what I would say is that it's crises like these that remind us why insurance is an essential service. It provides critical protections to individuals, families, and to businesses. And in this time, what we are reminded, and it is unfortunate, that insurance penetration rates remain quite low across emerging markets and developing economies. And so in light of this situation, it is, I think, important to note that we stand as insurance supervisors in a position to really, I think, reflect on some of the challenges facing the industry and facing supervisors. Ultimately, our number one objective is policyholder protection. And only today, the IAIS did put out an important statement dealing with prudential and financial stability considerations and how to balance those, of course, with fair treatment of customers and policyholder protection. It's clear that and for insurance, the crisis really hits companies in two ways. So one, of course, on the asset side, the wild swings in valuation of some of the assets that insurance companies are holding on to, and they're subject to those swings, and that can have a very detrimental effect on their investments and on their assets. And secondly, also on the liability side. And so thinking about the potential liabilities associated with COVID-19, I suspect causes a lot of stress amongst insurance company executives, because I know that it causes a lot of stress amongst insurance supervisors. And so right now, working through the crisis, it's very important that we continue to support policyholder protection. We continue to support the fair treatment of customers. And I would say that when we think towards the future and the ultimate impact that this crisis has on the insurance sector, and particularly on the potential for increasing confidence in the insurance sector and hopefully increasing insurance penetration rates, I hope that we're able to look back and think and reflect on the fact that insurance companies really stepped up and supported their policyholders, clearly communicated with them, and took it as an opportunity to build trust and confidence in the sector. And hopefully, as a result, we're able to demonstrate the value of insurance, hopefully also to build an appreciation for the valuable protections that insurance can provide. So I think overall, we'll have to see how the crisis evolves and what it means for insurance companies and how the insurance industry comes out of it. But I do hope that this crisis does become an opportunity to further build confidence and trust within the insurance sector, and hopefully help to improve some of those very low insurance penetration rates in the developing world.
Conor, well said. Insurance and protection is so critical, and times like these is when you really need it most. Governor, back to you. National Bank of Rwanda regulates and supervises all sectors other than security, so insurance, pensions, banking. With the COVID-19 pandemic spreading globally, what supervisory measures have you taken to mitigate its impact on the financial sector in Rwanda? And I should mention to our participants that I think prior to the crisis, by many indicators, many measures, Rwanda had been regarded as a success story for rapid growth in Africa. And, so therefore, whatever you're doing here to protect would be very interesting for us to know. Thank you.
Yeah, thanks, Babak. I think as I said earlier, this crisis started with the health crisis. Then governments, like our government, took measures to curb the spread of the virus, and therefore we had to close most of the activities, economic activities. And so from the central bank point of view, I think our first analysis was how was this going to affect the economy or the financial sector, the businesses. And number one, we had to allow a special restructuring by banks to their customers. Normally, as regulators know, we limit on the number of restructuring banks can do for their customers. So we had to allow a special window for restructuring for loans that would be hit by this crisis. So that's step number one we took, and in the first 3 weeks, banks had almost 25% of their customers applying for the restructuring of their loans. And that, together with the fact that the economic activities were now almost non-existent, we expected that the banks would face liquidity challenges. So we had to introduce two measures to support banks with their liquidity. One, we reduced our reserve requirements from 5% to 4%, and that's allowed them some good liquidity that we use to deal with the challenges that we are in. But we also put up a special fund, standby credit facility or liquidity facility for banks that they can assess at central bank rate and can borrow it for up to a maximum of 1 year to deal with the challenges of liquidity that would come from the their customers that are not able to service their loans, but also with the limited financial economic activities, we didn't expect much deposits to be coming to the banks. And so those were the two main measures taken to deal with any challenges of liquidity. Of course, as a regulator, we are concerned with the stability of the banks. So we had to follow up how they were implementing their business continuity plans to ensure that we didn't have any big challenges within the industry. I'm mainly focusing on banks because that's where we had big issues that could, and banks to some extent, we bring in microfinance institutions that we also supervise. Then beyond dealing with that short-term measures, we engaged and we worked with government, and the government has now introduced an economic recovery fund of 100, that's about 200 million to start with. And that supports farms from two angles. One, we know that the hospitality industry has been hit hard, and that is one of our main sectors in this country. So we know that hotels will take long to open because of the widespread crisis across the globe. So government will be supporting hotels to deal with their exposure in banks, indirectly also protecting banks against credit risk of these institutions. Then number two, another window is to facilitate different firms to get cheap working capital for them to restart their businesses. We started soft opening of the lockdown this week. And so if all goes well, we expect business to resume normally over the next 1 or 2, 3 months. So we expect firms were hit and therefore they need some soft loans to start their businesses. And we expect that to really help to kickstart the economy again. These were the main measures taken by the central bank and to an extent working with the government again, but also worked with the payment industry and moved almost digital. So maybe we might come back to that as we continue discussing, but we worked with the banks, with the telecom companies to make it easy for citizens to transact using digital channels to avoid any transmission of this virus through handling of cash.
Very interesting. So it sounds like, you mentioned a couple of interesting points, handling of cash, which is becoming very challenging, and also soft reopening and the measures meant to be taking. And I'd like to ask my colleague Diana to put up a notice that we are promoting for a program, not a program, it's actually another webinar we are doing, which is on supervising the new normal. Because Governor, what you and others talk about reopening, in some ways we have to look at it in the context of the new normal. Like we're not really going back to the normal until, as we all know, there's a vaccine of some kind. So the lead speakers are going to be Governor Stefan Ingves of the Central Bank of Sweden. Many of you know him as the former chair of the Basel Committee. He's also the chair of Toronto Center. And Dr. David Nabarro from the WHO. We also have a third speaker, which we're hoping to confirm soon. And this series will really talk more about the challenges there. So please tune in, and perhaps you, Governor, and Conor at a later date can come back and help us with that series as well. So thank you. Thank you, Diana. Going back to Conor now. So Conor, as a global insurance supervisory standard setter, how is the IAIS responding to this crisis to support its members in order to develop and maintain fair, safe, and stable insurance markets for the benefit and protection of policyholders, please? Thank you.
Thanks, Babak. And returning to one of the points that the Governor made at the very beginning, which was the fact that we're dealing now with a crisis that's very different than the 2008 financial crisis. We're dealing with a crisis that is now having very significant effects on the financial sector, but these effects are cross-sectoral in nature. They're not affecting banking, they're not affecting insurance, they're not affecting securities markets, they're affecting all of us in very similar and very significant ways. So many of the issues that we're facing in response to COVID-19 do require a cross-sectoral response. And so we have been working very closely with our colleagues at the Basel Committee, at IOSCO, the Securities Regulation Organization, and with the Financial Stability Board, as well as the Committee on Payments and Market Infrastructure, to really understand some of the cross-sectoral implications of it, but also, to the extent possible, work collaboratively to address some of the issues, monitor the developments, and respond appropriately. In terms of our work, I think it can be broadly captured in sort of three streams. So first and foremost is on the risk assessment side. Looking at the global insurance market, understanding some of the vulnerabilities within the global insurance market, and hopefully bringing an insurance perspective to some of the global forums that are talking about the impact of COVID-19 on the financial sector. Now, it's clear that we have to look at this from the perspective of really what is the effect, as I mentioned before, on the asset side of the balance sheet for insurance companies. And then we also have to look at some of the solvency implications of some of the coverage, and business interruption insurance has been one of the issues that I think has gotten a lot of attention in the media recently. And the question around to what extent insurance companies have provided explicitly or implicitly protection, and to what extent are insurance companies being put in a position by various initiatives around the world to encourage insurance companies to retroactively cover some of these risks. And these were risks that potentially weren't actually priced into the premiums that were paid by businesses. And so ultimately, insurance companies could face a fairly significant solvency hit if indeed some of these initiatives were to come to bear and actually require payment from insurance companies. The second piece that we've been working on is really on the information sharing side. It's clear that jurisdictions around the world have taken a number of measures to support the financial sector, to support the broader economy, the real economy. And so ultimately, what we've been trying to do is to work with our members to understand what insurance supervisors in particular have been doing, to share that information and give access to our membership, the wealth of data and information that we as a global organization can pull together and put into the hands of our membership, particularly who are looking at what steps they should take, what has been the impact of some of the steps that other supervisors have taken, what consideration should be given in terms of the effect of certain measures. So I think this information exchange piece is a real important value add the IAIS can bring, and that we've been focusing extensively on over the past 2 months. The third component is really on the coordination and cooperation. So as I mentioned before, working closely with our peers in the standard setting bodies, making sure that we understand how these issues are filtering through different aspects of the financial sector, and potentially forecasting where there could be an impact on the insurance sector, but also making sure that our colleagues in the other standard setting bodies and in other organizations that have a interest or mandate to monitor financial stability, that they're informed of some of the impacts on insurance. And then we've also been working very closely with our stakeholder community, really working to understand how different companies are responding, consumer groups, and I think hoping to ensure that there is an ongoing dialogue between supervisors, stakeholders, at the regional and global level, and the extent to which the IAIS can support that. Lastly, I would just highlight that discussions like this we also see as being critically important for the IAIS, reaching out to supervisors directly, having the opportunity for us to share what the IAIS is doing, but also having the opportunity to hear directly from supervisors who are at the front line of dealing with this crisis. What are some of the issues that they're facing? So I think overall those three areas of work really encapsulate what the IAIS has been doing in response to COVID-19, and how we've, I think, successfully reoriented ourselves to respond to the crisis and bring value to our membership.
Thank you very much. It's actually really refreshing to hear what you're saying because it underscores the importance of global cooperation. And because we're not getting a lot of good messages from several world leaders about the importance of global cooperation. So to have organizations like you that are there leading the charge is very comforting to know that things are working. So thank you for that. And thank you for all your sleepless nights, I'm sure, over the past several weeks, making sure all of these pieces come together. Governor, if I may turn to you, you referred to aspects of this question, so you may want to make your answer possibly a little bit more concise so we can do other questions as well. In the wake of COVID-19, can we now take a look at the inside of your institution? How have your staff been affected? And have you activated your business continuity plan or any other crisis management arrangements? Thank you.
Yes, okay. I think the first point I want to make is we are happy that to date none of our staff has been directly affected by the virus. At least we've done tests for almost a third of our staff, and they're all negative. So we are happy with that. But then when this crisis started, to enforce the distancing principle that was advised across the world, we had to move to working from home. And we are lucky that we had been undergoing a journey of automating our operations and processes. So by the time it happened, we were ready to move digital. In fact, we remained at the bank, we retained about 17, in fact less than 17, about 13 staff out of about 404 total staff we have in the bank. And these were people dealing directly with withdrawals of banks. This is a currency management team only, and then some few IT staff that were managing centrally the use of the system. So all the payments, all the payments, whether between banks of banks banking with us, government operations, all that are done online. And so we didn't have any problem with that. It was being processed by our staff from home. Movement of documents, signing of documents, we are doing that online. So we immediately really started implementing our business continuity plan. And we haven't really had any big problem during the crisis because we are lucky that we had automated most of our operations.
Conor, this next question may start off by appearing to be a bit of a commercial for IAIS from us. So a bit of a humble bragging for our partner here, but there's a real punchline at the end. So bear with me for a second. So in 2019, you really accomplished a lot. IAIS substantially revised a set of ICP's insurance core principles, the adoption of COMFRAME, the first global framework for the effective and globally consistent supervision of internationally active insurance groups, the adoption of the holistic framework for assessing and mitigating systemic risk in the global insurance sector, just to name a few. So the punchline is this: how is IAIS making sure that implementation of insurance reforms will not fall behind for its members due to this COVID disruption that we're all facing? Thank you.
Thank you very much, Babak, and I appreciate the opportunity, of course, to highlight that 2019 was indeed a very significant year for the IAIS. We made progress on all of the key policy initiatives that we had taken on post 2008 global financial crisis, and to bring those to a close towards the end of 2019 was a great accomplishment on the part of our membership to come together and agree on some fairly significant reforms. So I don't think that anyone could have predicted in 2019 that we were about to head into the scenario that we find ourselves in now. But I can say that within the IAIS, of course, we have been very mindful of the need to provide operational relief to our member supervisors and to insurance companies at this time. Our stakeholders, in particular insurance companies, we rely on extensively in terms of the implementation of our supervisory material, and the reforms that we adopted in 2019 are no different. We require, of course, their active participation in ensuring comprehensive and consistent implementation. So in March, our executive committee took a number of, I think, very important decisions to provide operational relief, but at the same time, to state unequivocally that this would not mean a delay in implementation. We would continue to go ahead as planned in terms of implementation, but recognizing some of the tools that we had for implementation, both in terms of the monitoring of the implementation of the insurance capital standard, as well as the holistic framework. So the policy measures that are part of that that framework and the implementation of those policy measures by supervisors, there would be no delay to the timelines. However, what we did say was that we would, recognizing the challenges associated with COVID-19, that we would extend some of the deadlines on our data collection work that goes along with supporting our work with the holistic framework. And secondly, with the insurance capital standard. So we would extend the timelines for data submission on the part of our members and the information that they were collecting from insurance groups within their jurisdictions. And in terms of what I think is the most important tool that we as a global standard setting body have to really, I would say, drive implementation of the policy measures that we develop by our member supervisors, our assessment tools, we made a decision to continue with our assessment of the implementation of the policy measures that are part of this holistic framework for identifying and mitigating systemic risk in the insurance sector. So we are continuing with our assessment. We have extended the timelines that jurisdictions have to respond in this assessment, and we anticipate that we will continue our assessment activities in 2021, 2022, building off this initial assessment. So from my perspective, I think we've taken a very measured and balanced approach in terms of recognizing the implications of COVID-19 on the capacity of our members and our stakeholders, but at the same time, unequivocally saying that implementation remains a priority and that we would continue our efforts to support implementation of the reforms that we adopted in 2019.
Thank you. Thank you for that. Governor, I wanted to take a different tack, bring technology into the question and impact on the poor. So digital financial services powered by fintech have the potential to lower costs by maximizing economies of scale, increase the speed, security, and transparency of transactions, and to allow for more tailored financial services that serve the poor, particularly in sub-Saharan Africa. How are supervisors using technology to monitor financial institutions more effectively? I guess in our language, SupTech. And is this making a difference in broadening financial inclusion in jurisdictions such as yours, please?
Yeah, thank you, Babak. Yes, as you said, we expect digital financial services really to play a significant role in improving financial inclusion and making financial services more accessible and affordable, and also improving economic or financial operations, at least the turnaround of economic transactions using digital financial services is going to be really high speed, and that will have positive impact on the economy. From our end, as the central bank, in fact, we play an active role in promoting not just overseeing the payment system through digital financial services, but we have a department that actively works with different stakeholders to drive the growth of financial or digital financial services within our country. One, it makes it easy for us from even a monetary policy point of view that we have the resources that are outside there in people's pockets to be in the formal sector, and therefore we are able to manage financial resources within the economy in general, but also when we talk of SupTech, like today, we've implemented an electronic data warehouse where we receive all the data from our financial institutions that we regulate directly from the source, and we are able to, on time, to analyze what's happening within banks. Now, even taking that into consideration in this crisis we are in, so we are able to monitor what is happening across the financial institution, because for them, they continued working. We took it as essential service within the country, so they continued working. And we're able to monitor, we're able to receive reports where we're at home. We're able to interact with them where we're at home. And we are able to at least to ensure that nothing unusual happens without our knowledge during this crisis. But also even going forward, we're able to have full information that is required, and it makes the work of the financial institutions, the regulated institutions, easier to deal with us, because the regulatory cost really goes down. So we think it's really key that we move digital, one, in terms of economic transactions, but also as regulators. We support that. We make it easier for innovators to bring on board new products. We are able to follow that up and encourage more products come on board, because we know the benefits of this. So, and it's helping us as regulators as well.
Excellent. Governor, as you were talking, it's just dawned on me. I mean, you put the points together about, as you are improving your system, greater access is becoming possible, and then you have real-time access to information to be able to supervise. This brings to my attention the fact that it's for me, very frustrating, the dichotomy between financial stability and financial inclusion for some people, as if you do one and then you do the other. But the two are intricately interconnected. I mean, IMF research suggests that risk to financial stability increase when access to credit is expanded without proper regulation and supervision. Again, IMF goes on, therefore, investing in high quality supervision can pay big dividends as financial inclusion expands. This dovetails well with the mission of Toronto Centre, and that's where our interest comes in. We don't really see much of a dichotomy between the two. We see them as the interrelated system, and I think the comments you made are a corroboration of that. Conor, let me ask you the final question, and then I'm very anxious to get to the question from the audience, because we have excellent questions from them. So, insurance supervisors have a significant role to play in facilitating innovation for greater societal benefits while ensuring prudent, fair, and responsible use of technology in the interests of policyholders. How should supervisors respond to supervising in a digital era? And what do you see a role for an organization like Toronto Centre, who's on the ground, that what can we do to help in this area? Thank you.
Oh, perfect. Maybe I'll take the question in two parts. So I'll deal with the first part of the question, and then I'll come back to where I see the Toronto Centre being in a strong position to be able to contribute to effective supervision. So, in terms of the digital transformation that we're seeing within the insurance industry, it's very clear that developments are moving ahead, and this crisis actually could even accelerate some of those trends. So even greater reliance on digital technology across the entire life cycle of the insurance business. So first and foremost, from our perspective, it's important that supervisors recognize the importance of building up capacity and expertise in the area of data sciences, and really the fundamental technologies that are supporting some of these innovations. Secondly, it's very clear that you have to continue with the ongoing fundamental supervisory skills. Just because it's a new technology doesn't mean that the principles of fair treatment of customers or sound prudential regulation don't apply. I think it's very important to recognize that to be supervising these new entrants into the field, you still need to build off a foundation of sound knowledge of the core tenets of supervision and regulation. The second piece that I would add, the third piece that I would add is really adapting a supervisory environment or building a supervisory environment for innovation. And what we've seen in a number of jurisdictions is that it is a bit of a challenge for new entrants to come in to the market in the same way that a traditional service provider would come into the market. And there's a variety of reasons that I think there is a sort of incumbent bias within a lot of regulatory frameworks. And recognizing that new technologies do need an opportunity to be tested, to be able to determine if they work, if they can deliver services that still maintain a high level of policyholder protection. There needs to be an opportunity to look at those innovations and how they could come to the market, and different approaches by different supervisors, sandboxes, innovation hubs, et cetera. But it's clear that the existing regulatory framework may not be the optimal one for encouraging innovation, and then steps can be taken by supervisors to find different avenues for new entrants to come into the market. The last piece, fundamentally, as I mentioned, we have to treat these new entrants as we would other entities that are coming into the market, in terms of making sure that customers are treated fairly, making sure that they're subject to sound prudential regulation. But I think we also need to be mindful that some of the key concepts around insurance supervision could change quite fundamentally in the coming years. And some of the trends that we're seeing in terms of big techs coming into financial services spaces, and some of the ways in which they're changing the business model of certain financial services. We've seen this, I think, quite significantly on the payment side. Ultimately, the entire game of supervision could change quite significantly in the coming years. So being mindful of what we're seeing and some of the trends that we're seeing, and I think supervisors need to be continuously looking to the horizon in terms of what does this really mean for how I go about my day-to-day job of supervision. In terms of how the Toronto Centre can support supervisors who are going through this journey. The Toronto Centre has a storied history of being able to train leaders in the financial services regulatory space. And I think ultimately, good leadership is going to be a core component of making sure that supervisors are well prepared and are continuing along the pathway of understanding and responding to some of these trends that we're seeing in terms of innovation. The second piece is that I would say, I think we've seen a demonstrable impact where we have supervisors who have taken a forward stance, a forward look in terms of what skills and experiences they need to bring into the supervisory authority. Two examples that jump into my mind. I'm not sure if my friends from Kenya or my friends from Ghana are on the call, but these are two supervisory authorities that I think have recognized the value of upskilling within their staff, and then also bringing in new talent and new experiences who can work with some of the people who are in a position to bring technology and the positive impact of it to financial services. And so I do think that the Toronto Centre could play a very important role in terms of helping supervisory authorities to map out where they can upskill, how they can go about developing their supervisory staff, both in the fundamentals of supervision, but also in terms of bringing in the right people in terms of understanding technology and the impact that it can have on the financial sector. And I think these two areas are where the Toronto Centre is very well positioned to be able to contribute.
Thank you very much, Conor. And this is very consistent with our strategic view of how to get involved. And also I highly recommend to the viewers to visit our website to take advantage of our Toronto Centre notes, TCNs on SupTech, FinTech, everything that's available there. And we are working on a project with USAID on sex disaggregated data and regulatory technology and SupTech. So we hope to be able to make that possible to the supervisory community. And we have pilot countries from Africa and Latin America are participating in this, and plus other programs that we're having in Asia. So thank you for that. Let me move to the audience questions. I'm very encouraged by the large number of questions we've received. And first, a big shout out to Gloria Igwe from Abuja, Nigeria, and for Ademola Abeye from Lagos, Nigeria. So already we have two nods from Nigeria here. So welcome everyone. So going to the Q&A, and I'm going to try to assign as many as I can. So let's do some rapid answers to really, really good questions. So it's not a justice to the questioner. It's very easy during and after a crisis that we as regulators and supervisors could reach over our responsibilities. What advice could be given to regulators and supervisors regarding their roles when dealing with this crisis and how they regulate and supervise their institutions? So obviously it's a huge, huge question, but the idea is how do we not overreach? So Governor, can I ask you to take a stab at this one?
Yeah, maybe Conor would be the right person to answer that, but I think it's true. We difficult times like this one might create challenges, and regulators may ease their grip on the regulations, and at the end of the day, you might have challenges. But what I would say, it's very important that we always have in mind the fact that stability remains the most important thing, the stability of the financial sector that we do regulate. And so, as I said, while we took measures to support, say, the business firm that were having challenges with the banks, but we have clear guidelines on how this is going to be done, not to compromise any principles of financial stability. Despite the challenges we are going through, we are keeping an eye of what is happening within the financial sector through different channels. In fact, we engage and talk to the CEOs of the financial institutions. So I think I totally agree with the statement. We have to remain focused and engaged on the ultimate goal of long-term financial stability as we try to solve short-term challenges.
Yeah, good point. And also it underscores the point that for some stakeholders out there, they think the contribution of supervisors and regulators during crisis sometimes is to get out of the way so that stability to the system can be brought in. But at the same time, there's a very important mission and mandate that supervisors and regulators play. And it's very, very important for everyone to understand. And I think our supervisory audience understands they never get a positive press release about what they do, but they always get a finger of blame pointed at them when something goes wrong. So, it's a tough balancing act here. Conor, the next question is sort of like, I guess, has a relation to this question. So let me just go right to you. What change, if any, do you see the pandemic have on financial stability going forward? Perhaps for Conor. So you're actually mentioning the question. Do you see any changes and revision to international standards going forward?
So I'll take the first question, and just to say that it's hard to predict with any level of certainty what the long-term impact of this crisis is going to be on the financial sector. And I think ultimately supervisors taking prudent steps to contribute to financial stability are critically important, and we'll continue to support our members in working through some of the challenges and the evolving nature of this crisis. I would also just add one of the key things for supervisors, and particularly for insurance supervisors, is never lose track of the key objectives. And I think ultimately that's how you prevent overreach. So I just wanted to add that as a sort of an addendum to the governor's answer on the first question. In terms of our standards, do I see any changes? No. I think at this moment, what we're seeing is that actually the standards that we've worked so hard on have contributed to the resilience of the financial sector. But I'll offer a personal view as well, just because my time at the IAIS will come to an end at some point in the not too distant future when I hit my statutory maximum here. So I feel empowered to offer a personal perspective. And what I would say is that I think that one of the benefits that could come from this crisis is that there will be a more systematic view on how solvency and conduct risks interact. And this is particularly important in insurance, where we are seeing some of the challenges around policyholder protection and prudential supervision. So I do hope that one of the benefits that come from this really tragic crisis is the fact that supervisors, particularly insurance supervisors, can have a deeper think of how these two areas of risk interact so that we can have a more integrated view on conduct and prudential regulation.
Thank you for that, Conor. Yeah, I'm just reflecting on you saying that you'll be leaving. I hope the statutes are revised because we need you at IAIS and other international fora. Anyway, the Governor, the next one is for you. And also before I do that, I think Nelson from Kenya likes the discussion. So thanks, Nelson. I really appreciate getting a positive comment from you. Back to the Governor. I thank you for this panel and would like to ask the Governor the specific measures taken for the microfinance sector, as these financial institutions don't usually have access to central bank money and so are not target of central bank importance in response to this pandemic. Do you have any views on this at all, Governor?
Yeah, interesting. This is something we've been discussing over the last maybe 1 month. And finally, we've settled to providing some resources to the microfinance institutions, looking at the mandates, our mandate as of financial stability mandate. There's the emergency liquidity facility that we can use in this case for the financial institutions we are overseeing. And yes, so we are providing some resources, short-term liquidity for any financial, any microfinance institution that is stable, that is sound, that has securities either in government securities or in bank depots that can support them to get this financing from ourselves. So as I said, we are in unprecedented times, so we are trying to look for solutions to support our financial institutions to go through this crisis. So yes, we are providing something. Good.
Difficult times. I have a question here for one of our Toronto Centre trainers. You mentioned, it's a question for Conor. You mentioned possible impacts on insurance companies, assets, and increased claims. Any concerns on insured people and companies to pay premiums? What is the role of the insurance supervisors to deal with this aspect during the crisis?
Thank you, and it's a great question. So ultimately, we haven't seen, I think, the full impact on the real economy, which is definitely going to have an impact on people's ability and capacity to continue to make payments to insurance companies to pay premiums. But I do think that it's important that insurance supervisors do implement measures that can provide greater flexibility for insurance companies in terms of the different types of payment that insurance companies can receive, how premiums can be collected, how insurance contracts can be executed. So I think that there's a number of steps that insurance supervisors are taking, working with the industry to provide greater flexibility for insurance companies and hopefully respond to some of the challenges that insured people are facing currently, but also over the sort of medium-term horizon could continue to face. So I think that flexibility that insurance supervisors are taking and the steps that insurance companies are taking to support insured people, premium payers to manage in this social distancing lockdown situation, I think hopefully that will mitigate some of the worst effects, but we won't see the longer term impact of the crisis on the real economy and then consequentially on how it affects premium payments over the medium to longer term horizon for quite a while.
Yeah, interesting point. And that's why for us, this reopening sounds much more optimistic than it is. And we kind of look at it as new normal, right? So supervising the new normal. So essentially what you talked about is very much relevant to that and fits well with that. Governor, this next question strikes me as a business continuity type of an area. So what critical data and information should financial regulators and supervisors make sure they're getting from their regulated institutions, and how frequent in the wake of COVID-19? So you probably thought about that in the context of all the disruptions.
Yeah, I think maybe the most frequent data requesting from our financial institutions now is, for example, we talked of the borrowers having challenges to finance or to service their loans. So on a weekly basis, we are getting data on the demands for restructuring, what kind of restructuring has been done, what does it mean on the overall loan book of the banks, and down to the microfinance institutions. We are looking at, of course, we follow what the banks are doing in terms of their business continuity, to be sure that there are no disruptions that could cause long-term challenges to the stability of the financial institutions. Of course, we follow up liquidity levels, and that we are able to see if there are any challenges that could affect the capital base of the company. So we are looking at the main indicators of financial stability more closely even than before. But we are seeing challenges, but also really looking at the possible sources of problems, which is the customers of these financial institutions. And so we see foreign liquidity, how, as we said, business entities are having challenges. So the flow of liquidity, do we have any challenges of sort of run on financial institutions, people withdrawing their money? So we really follow up anything that would create instability within the financial institutions.
Conor, I wonder if I can ask you to address this one, if you think that's appropriate for you. What do you foresee will be changed in respect to IFRS 17 in view of the effects of this pandemic?
IFRS 17, a topic that only a couple of months ago was occupying actually a significant amount of our time, which is, I think, somewhat been overshadowed as of late. But I think from our perspective, it's important that there be a realistic view in terms of implementation. It's clear that there's going to be a lot of challenges in terms of implementation, even in a best case scenario. So not in a crisis situation, in a best case scenario, in terms of making sure that the capacity exists within the market, within insurance companies, within the supervisory authorities, within other regulatory authorities that of course are going to have a role in this. So when you think about the transition and implementation of IFRS 17, I think the delays in terms of implementation are positive. I think also that supervisors and other organizations that are involved in the implementation of IFRS 17 take a look at a realistic view in terms of what they can do in the timelines that they have. And frankly, Babak, this is actually another area where I think the Toronto Centre is very well positioned to work with the industry and with supervisors in terms of addressing some of the challenges that exist in different markets in terms of actually going through the process to implement IFRS 17.
Conor, that's something that we actually done some work on this for sure. Conor, this is the next question's for you. I recall from reading your bio, if I'm not mistaken, you were a very senior official at the Revenue Commission of your country prior to becoming a Minister of Finance. So it's appropriate for you. Hopefully, I'm not throwing a hot potato at you. It's not about Rwanda, but maybe you can have some insights into this. Can central bank supervision of digital financial transaction in the informal sector lead to increasing official control, i.e. taxation, etc., which could dampen the vitality of this sector, increasing poverty and even threatening survival in these times of COVID that are beyond the normal?
Yeah, it's interesting that that question is asked, because that's one of the sort of stumbling blocks to going digital in most of the business entities here or even across different countries, because it really increases formality and, of course, the taxman's eye is always open. And but I think as authorities that want to promote long-term successes of formal economies, I think we have to structure our tax policy in a way that it doesn't discourage people moving digital. So that's very key. But again, I wouldn't want people to look at that as a negative issue without looking at the positive, the benefits of going digital, because these informal sector organizations or microfinances, micro businesses, if they go digital, they move into the formal sector, they're able to deal with the financial institution, they're able to raise financing to grow their businesses, they're able to benefit a lot by going formal than the small fear that the taxman will hit them hard on the head. Because at the end of the day, a good tax policy will not tax people out of their businesses. So that's the tax policy is the key to avoid taxing people out of businesses. But the benefits of going digital and therefore going formal are much more bigger than any fear of taxation.
Very good point. It's also an interesting pickle we're in, right? Because cash during COVID is a dirty entity. You don't want people to carry cash, touch cash, deal with cash. And yet for many poor people, that seems to be, one aspect of what they have. So you don't want to, throw the baby out with the bathwater. Hope there was a better analogy than that. But I think you handled that question very well. We've come to the close. I need to apologize to our viewers for not being able to read all of your questions. Questions were great. The ones that have not been read are not lost. We have a record of all of them, and we'll deal with them one way or another, either by responding to you directly or incorporating into our training programs and publications. A huge thanks to our speakers. You were very kind and thoughtful with your time, but also a big compliment to you. You had a wide range. There are actors out there like Jack Nicholson or Russell Crowe can only act in one way, but you were like one of these other superstars who really could answer a wide range of questions in different ways. So thank you so much. You did extremely well, and we are very grateful to you. Thank you, everyone. Bye.
Thank you. Thanks again for
Thank you very much, Babak. Thank you, Governor.
Bye-bye.
And thanks to the audience for the interacting questions.
Thank you.
Yeah, absolutely. That was, again, another great Toronto Centre program, and look forward to the next opportunity to contribute.
You'll be back. The two of you will for sure be back. Thank you. Bye-bye.
Thank you. Thank you.
Bye-bye.